Good afternoon, everybody. Welcome to our YouTube channel, Fast CPA and Consultants. I'd like to introduce our CPA, Fulton Sanchez. Welcome back, Fulton.
Thank you, Sarita.
If you're here for the first time a few months ago, we started this series called Tax Talks, where you send us your questions through email or social media. And today's topic is accounting for tech companies. We're going to start with our first question. What is a tech company CPA?
Tech company CPA is an accountant or a CPA who specializes in giving advice to tech companies. Tech companies are the ones that they advise or they provide services in the tech industry. This could be networking, this could be software, this could be hardware, this could be in the cloud, like selling a space in the cloud, in the private cloud. It could also be the creation of software and the creation of specific apps for companies. So in all this project, let's say that the tech companies take, there is different criteria for the organization of the accounting and the taxation of the company. Whenever there is a project, for example, there are tech companies that specialize in the implementation of software. So they don't produce anything, they do consulting only for the production of software, for the installation of the software, for the implementation of the software. So if that is the case, then the only thing there will be the payroll time that the company must pay for the implementation to their consultants. There are the companies that they develop apps where there is a time for development, a time for requirement from the client, then they go and develop the specific app. Many times these companies, let's say they have developers in other countries. So this is where the accounting comes. How do I classify transactions when I have developers in other countries? Are they employees? Are they vendors? How do I classify them? These are the particularities of this industry when there is projects within the tech industries.
Understood. Our second question. How do accountants manage tech companies?
As I said, it starts with the bank account. Any company needs a bank account with the objective of, any tech company needs a bank account with the objective of receiving the payment from their clients. And then that account is also used for the payments to the vendors, including the employees and developers in other countries. So the process starts with that, with making sure that the projects that are, let's say, paid or payment is received are the ones that are deposited into the bank account. And if anything is missing, then this is when the internal control comes. Same thing with the expenses, the correctly classification of the expenses. And the differentiation, for example, for companies that sell software, then the software will be intangible asset. It will not be an expense. Like inventory. For companies that sell spaces in the cloud, then the company buys a space from a larger company like Azure or Microsoft. They buy larger space in the cloud, and then they start selling that to other companies piece by piece. Then whatever they purchase from Amazon, Azure, or from Microsoft, then it will be kind of an inventory, because I am buying a huge amount of space. I am paying a huge amount of space, and I am selling little by little. So all those particularities that the tech industry shows needs to be accounted or taken into account whenever I am doing the accounting for the tech companies.
Understood. Our third question is, what is tech company bookkeeping?
The bookkeeping for tech companies is exclusively the keeping of the books, the accounting books. So I deal with the bank statements, and I produce the report, the financial report, the profit and loss, or the balance sheet according to the bookkeeping that I am doing during the month or during the year.
Understood. And our last question. What are the benefits of having a CPA specializing in tech companies?
The benefit is basically the correctly classification of the transaction that the company will produce. In this case, for example, tech companies that provide service to clients, it will be very straightforward. Income for the money received for the services and expenses for the payment of the employees and other expenses. But the case for developing a software, renting an space in the cloud and selling the space in the cloud, for example, it will be a little different, the classification of that type of transaction. There is also of that type of activity. There is also, for example, companies that are devoted exclusively. There are information centers or data centers where the objective of the data centers is to keep clients, could be the server of clients in a specific place that is safe, fireproof, and always online, and also or the selling of a cloud space for this data center. This is also another part of the tech industry that is coming to place now, where there is so much data, so much data in the economy that needs to be stored securely outside of the premises of the company and fireproof. In this case, for example, it will not be too much of a difference from other activities, because the data center will receive the income as a rental income, because the data center is basically renting a place in their premises and a place in the cloud. So it will be renting income as well as the expenses for the activity. So all these particularities involve the tech industry. It is not one single activity. There are many activities, different activities that involve the tech industry.
Understood. So that was our last question for today. Thank you, Fulton, for your time and also information. If you have any more questions, you can send them to our email and social media. We'll put the link down below for our Facebook private group, and we'll see you on the next video.
Thank you.